I hope this gentleman understands that, especially in this situation, the CEO, Sam Galletti, he owns like 40% of the company. So if he dilutes, he's diluting himself too. So I hope he understands that.
What share dilution actually does to the shareholder, because I think maybe a lot of new people who are invested in Tattoo Chef, maybe they don't understand what that shares outstanding number really does mean.
So let's say there's a company that makes $10 a year and there are 10 shares. That gives every shareholder $1 in profit per year. Now let's say they increase the number of shares to 12. They still make $10. All of a sudden now, you're getting 83 cents per share.
You could say silent killer if the company's not doing anything with the cash, there's no need. But you look at an acquisition like they just had a New Mexico Foods company where they can get factories, where they can get a workforce there and other brands as well. There's obviously a lot of cost synergies there and a huge revenue growth, so it can make sense. And if the company didn't ever, raise capital, let's say, they probably wouldn't have been able to do that deal. If I recall, it was a $35 million deal. So some food for thought there.
Just based on valuations, and history has shown this. Does that mean you can't find value? No. But I just always advise caution when it comes to overhyped stocks, that the average person on YouTube who has no backing for it, has no reason for it besides they see a lot of hype and they're trying to gain money from YouTube watchers. Just be careful. That's all I'm asking.
I hate this generalization of like, everybody's an idiot. They don't know what they're doing. Like, oh gosh, it's painful, man.
I don't need to do my due diligence on a company to see that they're diluting me, that people are overpaying for the revenue.
What? You don't need to do your due diligence.
To me, this is not something that you want to take some kind of long position. This is more of like a swing trade or a day trade, because when you get these, let's go to the daily chart.
Oh gosh. So now it's not a long-term investment, but you should be day trading it or swing trading it.
Surges of volume that you get every once in a while, because this is not something that value investors go to, and it's not something that your financial advisor is typically going to go to. But every once in a while, especially on earnings, you're going to get these little pops, and you can take advantage of those. And I would go and swing trade those, or more importantly, I would go and day trade those, because Seth, as you know, when you get...
See, the thing about me is, I've seen, especially that other gentleman, if we want to call him a gentleman, I've seen him blast YouTubers, and call them idiots and they deserve to lose all their money. You're not going to hear me say that. You're not going to hear me call him an idiot or anything like that, but it's just like, this is ridiculous, man. I'm still waiting for when we get into the fundamentals. But he said he didn't do any due diligence on the stock, so I don't know if we're even going to get into that. I was not expecting this bad. Like, come on,
and
man.
Had different numbers, which...
Oh, goodness.
Question is it probable? Now, shares outstanding. I'm being very, very low. They did 26% increase in shares in the last year alone. I did 10, 12.5, and 15% increase in shares. According to this, it should be. But I also.
Okay, so now he's plugging it into a calculator and he thinks that's going to give him his what the stock price is going to do. Sure, that's what Warren Buffett does. Warren Buffett just throws it in a calculator and it's like, woo, now I know exactly where the stock's going. Come on, man.
Be conservative on the share change. Profit margin, I went way higher on the profit margin, 579.
Now you can't comment like this when you say you did no due diligence on this stock and you don't speak about the fundamentals and the store expansion, the SKU expansion, what's going on with this whole movement toward more plant-based items. You can't just start throwing out, I think profit margin, this, revenue growth. You can't even do that. You're not in a position to be able to do that. Now you're just throwing numbers around, and it's just ridiculous.
Free cash flow did the same thing. Guys, PE, I did 20, 25, and 30. I think this is way too high, but I'm just trying to prove a point here.
Way too high?
I hit my analyze button.
Way too high for a company that just grew branded revenue 62% year over year? Okay. Whatever.
Guys, I don't even have it worth, only if your assumptions on the high side are accurate, does it make sense to own the stock. Literally anything else, I look at it going, okay.
I don't even know why he's got it worth $5. It should be worth like $1, maybe 50 cents.
Oh, a lot's going to happen. So really, if you buy it today, you're going to do very, very well, assuming everything I did above actually hits. Listen, I think Amazon's a great company. They didn't hit their revenue numbers and profit numbers for like 15 years. Like literally analysts were wrong time and time again, going out 5, 6, 7 years. It's just very difficult. It's extremely, extremely difficult. And I think those dilution, I think they're going to dilute people even more than that, 10 or 15. I think they're going to dilute people maybe 20-25% a year for the next few years just to be able to justify their growth levels.
That's typically what.
Why would they? Like, okay, if you're going to make a comment like that, an accusation like that, they're going to dilute. Why? Go ahead. Like, why would they need to? It doesn't make any sense. Like, the company's in a great financial position, unless they have some huge losses. Like, go into why you think they're going to have to dilute shareholder value 25%.
Companies do, and then on top of that, assume that they can do 50% revenue growth for 7 years in a row.
It's a tough.
Everything has to fall in line perfectly.
It just could it work? Absolutely. But I'm just sitting there saying, if you have 100 tattooed chefs, you're going to lose a lot of money on 98 of them, and you might find the 2 that hit it, and you probably won't make your money back. I always bring the example of .com numbers. Say if you invested in every .com stock back in 2000 and today, you made 3% a year. The market did about 7% a year. And of that 3% a year, 80% of it was Microsoft, Apple, and Amazon. And Amazon's up 20 times from its peak of 2000. So you have to be right on. So even then, you didn't beat the market picking all the .com stocks that, by the way, had the future potential of the world. Nothing was going to stop them. This is the world of the internet. It was changing the world, and it did change the world. But still, companies can fall even when they're changing the world. That's just the bottom line.
Baloney! Like, give me a break. Warren Buffett's like sees. Oh, let me see. Oh, it's been 25 seconds. Yep, it's a buy. No, that's not the way it works, man. Like, come on. Like,